According to an often cited survey, only about 40% of those who rent their homes have a renter's insurance policy. In contrast, 96% of homeowners carry insurance. This begs the question of why there's such a discrepancy. In my opinion, it seems that the reason most people don't have renter's insurance is because they don't fully understand its benefits. With that, here are 5 things you should know about renter's insurance policies and why you might want to get one. The first thing you should know about renter's insurance is what type of events and incidents it protects you against. Most renter's insurance policies will protect you from various damages and thefts. This includes losses resulting from windstorms, fires, vandalism, and more. However, some events that aren't typically covered include floods and earthquakes. That's why you'll want to double check the terms of your policy and see if additional coverage may be needed. Something that most people might not realize about renter's insurance is that the items don't need to be in your home at the time they're damaged or stolen in order to be covered under your policy. While you might assume that renter's insurance policies wouldn't apply to items you take outside of your home, that actually isn't the case. In fact, a major misconception about renter's insurance is that it's covering your home, when in reality it's covering all of your items. For me, this aspect of renter's insurance is what really makes it worth it, as it protects from a vast number of issues and could prevent heartbreaking situations from becoming bank-breaking ones. So whether your luggage is stolen while you're on vacation, or your laptop gets damaged at the cafe, you can rest easy knowing that your policy will likely reimburse you. Speaking of reimbursement, when purchasing renter's insurance, something you'll want to know is whether the policy pays actual cash value or replacement value on claims. There are 2 main types of renter's insurance policies, those that pay out actual cash value and those that offer replacement value. While actual cash value policies may be cheaper, this means that your reimbursement will factor in things like depreciation and condition. In other words, you'll be getting less cash on your claim. However, replacement value policies will pay out what the claimed item would cost you to purchase new, meaning you won't have to pony up anything extra. That's why, if possible, I'd recommend searching for a replacement value renter's insurance policy. Now that you have a basic idea of how renter's insurance works, it should be noted that these policies are typically far more affordable than other types of insurance. Perhaps the most surprising thing about many renter's insurance policies is that they don't cost as much as you might think. According to Value Penguin, some areas offer basic policies for as little as $10 a month, while more storm-prone cities average closer to $20 a month. Obviously, these prices can vary depending on a number of factors, but overall they typically present a good value. Finally, as affordable as renter's insurance may be already, you may be able to save even more thanks to discounts and other offers. One popular way of saving on your renter's insurance policy is to bundle it with your auto insurance. In most cases, you can save a significant amount of money by going this route. Speaking of auto insurance, just as your premium may be lower if your car has certain safety or security features, the same is true of some renter's insurance policies. Finally, if you want to save money now but possibly pay more down the road, there's always the option to select a policy with a larger deductible. Just keep in mind that while this will lead to a lower monthly premium, it does mean you'll have to pay more out of pocket should you need to file a claim.
Property insurance basically has 3 types. The first is homeowner's insurance. Simply put, that means that you are going to be living in the house that you own. The second type is tenant-occupied houses, probably what most of your investment properties will be. This is when someone's living in the property that is not you. And the third is vacant properties, properties that don't have anyone living in them at all. The first type, homeowner's insurance, is not what we're going to talk about in this video. There's other videos on our channel. If you want to check out homeowner's insurance, you should go check those out. Let's talk first about the second type, which is tenant-occupied. First of all, you really need to have a lease with your tenants. You need to have a lease set up, probably have an attorney put that together for you so that your tenants have signed something and agreed to how they're going to take care of the space, what they're going to pay for, what they're not going to pay for, all those kinds of things. Why that's important when it comes to insurance is that insurance claims are based on those lease agreements. It's super important that you have those in place when a claim happens, because the claims adjuster, the people that are working on the claim itself, is going to look at that lease agreement as a way of deciding who's responsible for whatever it is that happened, especially if it's a liability claim. So having a lease agreement is super important. Let's talk about the actual coverages. So there's basically 2 types of insurance coverage on your investment properties. One is going to be property coverage, as simply coverage for the structure itself. If a fire happens, if a tornado happens, if something happens to the structure of the home, we're going to take it back to the way it was before. We're going to rebuild it or fix the damage based on the insurance policy that you purchased. So the first kind of coverage you have is property. The second kind of coverage you have is liability. This is coverage for bad things that happen to other people because of your property. So if someone tripped on the front steps, or if there was something that happened on the property, someone was hurt and they either needed medical attention or they hired a personal injury attorney, and either way, your insurance policy has liability coverage there to help deal with that situation. In my opinion, you want to have at least $500,000 of liability coverage on your policy. If you have more properties, which means more exposure to bad things that happen, I would increase that to $1 million, and maybe even have a $1, $2, or $3 million liability umbrella on top of that. Really depends on how much exposure you have, how many properties you have, and what your comfort level is with your liability coverage, how much coverage you want to have. You can never really go too high on liability coverage, because if something bad happens, you want to make sure that you have enough liability coverage on your policy to deal with even the worst case scenario. So you have property coverage, coverage for the structure, and liability coverage, coverage for bad things that happen to other people because of your property. Those are the two types of coverage we'll talk about. Let's start with property. We want to insure our building for the amount of money it would actually cost to replace it. Now, this may have nothing to do with the amount of money you bought it for. In fact, if you got a great deal, it's probably going to be higher than the amount that you bought it for. In general, properties are insured from between $125 a square foot to even up to $200 a square foot for super, super nice properties. So that's the ballpark that you want to be in, but you definitely want to talk to your insurance agent and talk through the property coverage limit, the building coverage limits for your property, and make sure that they're properly insured. This is a great place to talk about the co-insurance clause. A co-insurance clause is really kind of insurance geeky, and I won't dig too deep into it. But basically, if you underinsure your property, if you don't insure it for the actual amount that it would need to be replaced, in a claim, even a small claim, they're going to penalize you in that claim situation and actually give you even less money than they should if you haven't properly insured the property. So a co-insurance clause is generally a percentage of what the house should be insured for. So if you see a 100% co-insurance clause, that's kind of concerning. That means that you're going to be penalized if you underinsured at all. If you underinsured at all, that co-insurance clause is going to come into place and penalize you. Most of the time when I put policies in place for investment properties, I want to see a co-insurance clause of 80%, which means there's some wiggle room there. We're going to insure for at least 80% of the replacement cost, and properly we should insure all the way to 100% of the replacement cost. But because that co-insurance clause is set at a lower level, we've got a little bit of leeway there so that we don't get penalized in a claim situation, even if it turns out we were a little bit underinsured. So if you have a co-insurance clause on your policy, 80% is what you want to see. And if you have 100%, you better make sure that you actually are insured to the replacement cost of the property, or you're going to end up in trouble in a claim situation. So we've got building coverage, the coverage that it's going to coverage for actually replacing your house, and then we want to be aware of that co-insurance clause as a part of making sure that our building is covered properly and our claims are paid in the best way possible. Okay, a couple more types of coverages we want to talk about. One is called business income coverage. You're making money off of these properties, right? You're getting a certain amount of rent from the renters each month, probably. If that house were to burn down and it was going to take a whole year to replace that house, then you wouldn't be getting income anymore. The renter doesn't have to pay rents if that property isn't there for them to live in anymore. And so you lose income because of that. So not only are you having to rebuild this space, but you're losing income that you would have had if the bad thing hadn't happened, if the fire or the tornado or whatever hadn't happened. And so I suggest that you have building income coverage on your policy, business income coverage on your policy, and you have that for the amount of money you would make off of that structure. So if you're getting rents of $10,000 per month from a given structure, then you want to make sure your business income coverage is set at $10,000 per month. Now, there's lots of little details on business income coverage. Not going to go too deep into it right now, but definitely make sure you have business income coverage on your policy. There's lots of other types of coverage on the policy. There's cyber liability, there's equipment breakdown, there's all different kinds of little things that I'm not going to dig too deep into because this video is just generally about investment properties. So you definitely want to talk with your insurance agent and ask, what do I have, what don't I have, and make those decisions. If your insurance agent included something that ultimately you don't want to have, that's okay. You talk it through with them, you decide to remove it, no big deal. So talk through the property coverage, talk through the liability coverage, make sure the co-insurance clause is at about 80%, if not lower. Make sure you have business income coverage on your policy, and you should be all set. Last thing I'll talk about before kind of going to the next step is you're going to have a deductible. My suggestion for properties, if you have multiple properties, is at least $2,500. You don't want to make a bunch of small claims. It's going to make your insurance premium go up anyway. So have at least a $2,500 deductible. And if you have lots of properties, you might even have a $5,000 or $10,000 deductible on your insurance policy, making sure you don't make those small claims and get yourself in trouble with your insurance premium going up because you had 2, 3, 4 claims in the last couple of years. That's definitely what you want to avoid. So having a slightly higher deductible, $2,500 at least, is a smart idea on investment properties. After you put the policy in place, oftentimes the insurance company is going to want to come out and take a look at it. And there's a few things that they're looking for and might suggest you make changes about, so I thought I'd just point it out. If you have any stairs in your house, either outside or inside, they're going to want to have a hand railing on those stairs. If you have a sidewalk that has cracks or different levels, they may want you to level it or figure something out about that. If you have older roofs, they may decide to either change the coverage on the roof to what's called ACV coverage, a lesser coverage, or they may even say, you know, the roof's too old, there's probably going to be a claim soon, and we don't want to insure the property. So you would have to replace the roof or find another insurance company who's willing to insure a house with an older roof. So roofs, furnaces, handrails, you know, the fact that there's fire extinguishers in the house or smoke alarms, if you have a sprinkler system in your apartment complex or something like that, that'll be a positive as well. Just all those kinds of things are parts of how the insurance company is going to take a look at the property after the policy's been put in place to make sure that it's up to the standards that that insurance company expects when they're insuring a home. So that's pretty much it. If you are looking to invest in properties, it's a great investment. They're a wonderful way to invest your money and make money on top of that over the course of time. Lots and lots of people invest in properties.
So renter's insurance, what is it? So it is essentially what it's called. It's insurance that's designed for renters. It's a type of homeowner's policy. If you want to get technical, it's called an HO4 policy. So homeowner's policy type 4, that's renter's insurance. If you're living somewhere that you do not own, renter's insurance is for you. And that includes renting a room in someone else's home, or even if you're not paying rent for where you're staying, maybe you're an exchange student or an au pair, you should still consider getting rental insurance. And I'll talk more about that in a little bit. So what does renter's insurance cover? And I'm actually going to do this by looking at my own renter's policy so you guys can see exactly, you know, with a real life example, the types of things that renter's insurance typically covers. So the first thing I have here is personal property coverage. So this covers anything that you own, literally anything. Your clothes, your furniture, the camera that I'm recording with, TVs, anything like that. Anything that belongs to you is covered under your personal property. So if it's stolen, if there's a fire, anything like that that causes you to have your property destroyed, that is the coverage that will kick in to replace whatever has been lost. And also personal property coverage typically covers you anywhere in the world. So for example, if I'm traveling and you know my suitcase gets stolen, I can put in a claim for that. And there really is no standard limit. You really just choose your coverage based on how much things you have and what they're worth. So my policy, and this policy is actually shared with my roommate, our personal property coverage is a limit of $20,000. So we're covered up to that amount. And then also if you have any like super high ticket items, like if you have a really expensive camera or just really valuable things, maybe an engagement ring or something like that, that you want to put special protections and special insurance on, you also have the option of listing out what they call valuable articles in your policy, and that makes it even more fireproof if something really high ticket like that went missing. Fortunately, or unfortunately I guess, I'm not at that level yet, so when I get something that expensive, I'll let you know. The second thing that's listed on my policy is loss of use. And so that is essentially like, if there's a fire, if there's anything that makes your home uninhabitable, or if there's something that needs to be repaired, something like that, that makes your apartment or wherever you're staying uninhabitable, and you have to leave, you have to get a hotel or something like that in the interim, that's where loss of use kicks in. So they will pay up to, I think my limit on here is $6,000 if something like that were to ever happen and we had to leave the apartment. Next is personal liability, and this is a huge one. So typically, if you're renting an apartment and your complex requires you to have renter's insurance, this is typically the reason why they require you to have renter's insurance, because they want to make sure that if you destroy something happens on the property that's your fault, that they're not going to be on the line for it. So if you start a fire, they're not on the line for it. They're going to be coming to your insurance policy first to try to recoup the money that it's going to cost to, replace and rebuild their property. So most apartment complexes that do require you have insurance, they will usually mandate that you have like about $200,000 to $300,000 worth of personal liability insurance. My apartment complex that we moved to right now is a little extra. They require a minimum of $500,000. So I actually had to switch policies, like switch carriers when I moved here, because the carrier I had before didn't even have options available up to that limit. So I had to get a whole new insurance policy so that I was able to have $500,000 of personal liability coverage. Next is medical payments, and I'm covered for medical payments up to $1,000. So this would kick in if anybody gets injured while they're inside of your apartment, regardless of who's at fault. Whether it's your fault or their fault, if somebody gets injured, we have up to $1,000 that we can put in a claim for injury to others while they are in our space. And then the last provision that our policy has is for fungi, mold, or bacteria coverage. So if we ever develop a mold problem or anything like that, that's where that would kick in. Funny enough, I know people right now who are going through a very serious mold issue, and so these types of provisions can really come in handy. Now, another aspect of renter's insurance that's super important is to know your deductible. So the deductible, and this is important not just for renter's insurance, but for just insurance in general. So your deductible is the amount of money that you have to essentially forfeit if you make a claim. So for example, if I put in a claim that, my clothes all got destroyed and now I need $1,000 to replace my wardrobe, for example. So the insurance company, instead of sending me $1,000, they'll only send me $750 because $250 is my deductible. So that's essentially what you have to come out of pocket with, in essence, if you make a claim. So my deductible on my policy is $250. There are policies with different deductibles out there. For renter's insurance, typically your deductible will be anywhere from $100 to $500. It really depends on the policy you decide to go with. Some carriers allow you to choose your deductible, and that will make your premium either increase or decrease. So if you opt to go with a higher deductible, most likely your premium is going to be lower than if you were to opt for a lower deductible. So Akiva, you might ask, if I don't need to have renter's insurance, then why should I get it anyway? And here's why. Renter's insurance is like the cheapest insurance that you could ever buy in comparison to like your auto insurance or other homeowners policies or any other type of major insurance that you can get. Renter's insurance is relatively cheap. In my old apartment, they didn't have a requirement for renter's insurance, but I still got it anyway. So for my policy and everything I just told you guys about, my premium for the whole year is only $135. And that's pretty standard. You could even get it for less than that. So renter's insurance is very affordable. And honestly, you are going to be so glad you got it in the event that you do need it. Anything can happen. What if there's a fire in your apartment and you gotta go? Where are you gonna go? How are you gonna pay for this hotel, to feed yourself, to replace all of your things? So for such a small cost, in the grand scheme of things, it is so worth it. And going back to what I was saying earlier, even if you're just, living in someone else's house and they have their homeowner's insurance, that's all good and dandy. But say, for example, you cause a fire in these people's house, their homeowner's policy, even though they technically can't cover it because it's their house, because you're at fault, you just don't want to put yourself in a position where you're liable for your negligence. Or if any of your contents are damaged or missing, you don't want to have to rely on your landlord to, make a claim on their policy for your stuff. And they probably won't, to be honest, because that's just a big hassle and that's increasing their costs. Renter's insurance to me is just too affordable to pass up, and it's a decision I'm pretty sure that you won't regret, especially if you end up needing to use it. Okay, so I'm convinced now. I understand all the benefits of renter's insurance, and I understand that it's really not a lot of money, and I want to get a policy. Where do I go? How do I get it? So there's a lot of ways in which you can get a renter's insurance policy. A lot of people like to start with their auto insurance carrier, and that's, how I got my first renter's insurance policy. I just, added it on to my car insurance policy, got that little multi-line discount going on, even though it only was like $17, but whatever. So that's a good place you can go to start off with. How I got my car policy is that I ended up calling AAA. AAA also has their Insurance Connect, so they can connect you with some good insurance carriers. And another way is just to, do your research online. I know a lot of people are really hyped into Lemonade and all these kind of new age, low cost monthly digital companies doing insurance. So just do your research and, find a company that works best for you. What I will say to look out for in a good renter's insurance company, you want to look at the history of how claims are handled, because just because it's cheap or the best price or the best coverage doesn't mean that if you need to file a claim, it's going to be the smoothest process. Trust me, I'm the queen of fighting with companies, and I don't like doing that. So that's one thing you might want to look out for is their reputation. They might want to give you a hard time if you put in a claim.